Bitcoin has evolved from a niche digital asset to a global phenomenon influencing financial markets, governments, and corporations. Understanding Bitcoin's role in the global landscape requires a deep dive into how it's valued, its market dynamics, and its impact on both national economies and corporate strategies. Bitcoin's emergence challenges traditional notions of currency valuation. While most people consider Bitcoin's value in terms of their local currency, flipping this perspective to value other currencies in Bitcoin offers unique insights. As we learned, the US dollar serves as the world's primary reserve currency, a status established post-World War II during the Bretton Woods Agreement. This means most international transactions are conducted in US dollar. Commodities like oil and gold are priced in US dollar, influencing global markets. This means the US dollar-Bitcoin trading pair is one of the most liquid, providing more accurate pricing. Bitcoin has experienced significant value fluctuations against major fiat currencies since its inception in 2009. In the early days of Bitcoin, transactions were conducted at fractions of a cent, with the famous pizza exchange valuing 10,000 Bitcoin at $41 in 2010. In December 2024, Bitcoin crossed $100,000 for the first time, showcasing its long-term appreciation against the dollar. This remarkable trajectory underscores a broader reality. Everything is gradually losing value relative to Bitcoin. The dollar, like other fiat currencies, is designed to devalue over time due to inflationary pressures and monetary policies that rely on continuous expansion. It becomes clearer with each passing year that fiat currencies are on a path of gradual decline when measured against an asset with immutable scarcity. This trend extends beyond fiat currencies to tangible assets like real estate. In 2010, the average sales price of houses sold in the United States was approximately $272,900. At that time, Bitcoin was valued at around 30 pennies, meaning it would have taken over 900,000 Bitcoin to purchase the average American home. Fast forward to December 2024, with Bitcoin surpassing $100,000 and the average home price rising to about $545,800, the same property now costs roughly 5.5 Bitcoin. This stark contrast illustrates how Bitcoin's appreciation has outpaced real estate values, leading to a significant decrease in the number of Bitcoins required to purchase an average home. This shift doesn't signify the immediate collapse of fiat systems, but rather a profound transformation in how we measure and store value. The phrase, "everything is going to zero against Bitcoin," may sound provocative, but it encapsulates a simple truth. Bitcoin's value proposition strengthens as fiat currencies lose their purchasing power. This shift is not just a financial reckoning, it's a societal one. People are waking up to the need for a money system that is resistant to manipulation, immune to political influence, and accessible to all. Bitcoin's influence extends beyond individual investors to national governments and corporations. In September 2021, El Salvador became the first country to adopt Bitcoin as legal tender alongside the US dollar. Motivations include offering financial services to the unbanked population and attracting investment and positioning the country as a technological leader. The approval of Bitcoin exchange-traded funds marks a significant step towards mainstream adoption. While in October 2021, the first Bitcoin futures ETF was launched in the U.S., since January 2024 spot Bitcoin ETFs are available to trade, allowing investors to gain direct exposure to Bitcoin through traditional financial markets. U.S. President Donald J. Trump has expressed interest in putting Bitcoin into the strategic reserve of the U.S. U.S. Senator Cynthia Lummis of Wyoming proposed a bill establishing a Bitcoin purchase program of up to 200,000 Bitcoin a year over a 5-year period, concluding into 1 million Bitcoin, which would be nearly 5% of the total supply. The Bitcoin would be held for at least 20 years and could only be disposed of for the purpose of paying off federal debt. Several high-profile companies have integrated Bitcoin into their business strategies, signaling confidence in its future. In early 2021, Tesla invested $1.5 billion in Bitcoin and began accepting it as payment for vehicles. Although they later suspended Bitcoin payments due to environmental concerns over mining, Tesla retained its Bitcoin holdings, indicating a long-term interest. Strategy, led by Michael Saylor, has been a prominent corporate advocate for Bitcoin. As of December 2024, the company owns more than 446,000 Bitcoin, with an average purchase price of approximately $62,428 per Bitcoin, totaling around $27.9 billion. From August 2020, prior to initiating its Bitcoin acquisition strategy, by December 2024, the stock price has risen around 2,500% in just over 4 years. In October 2023, Ferrari announced it would start accepting Bitcoin and other cryptocurrencies for car purchases in the US, with plans to expand to Europe. This move responds to customer demand and represents a blend of luxury markets with digital innovation. These 3 examples are just a glimpse into a growing trend, highlighting the increasing interest that companies worldwide are showing in Bitcoin.